Good morning, everyone. Welcome back to True Telos Trading. Today is the 13th of January, 2026. We have another trade on an A-plus quality stock. Unfortunately, we are red today on that stock. As a matter of fact, it's the biggest red day this year. It's only January, but we are down $63.63 on an A-plus quality stock today. We saw it popping up and it had a great news headline. Unfortunately, it did not hold its ascension, and we caught a big move down. It wasn't a very big move down. It was 12 cents, but big to me nonetheless. That's not something that we want to see early in the morning, especially on a stock with very good news. Let's go ahead and get into that stock of the day. The ticker of the stock we traded this morning was XAIR. Again, today is the 13th of January, 2026. The stock did have decent news. It had acquired another company for $32 million. I thought that was quite significant for a company to acquire another one. This was +3 here. The float was below 10 million shares. As a matter of fact, it was at 7.5 million shares. This would be a +2. It was just above the 200 moving average when I bought it. The 200 moving average was about at $1.36 when I bought it. It was at $1.45. This will be a +2 here. The volume was decent. When I got into the trade, it was moving off of, let me go back here and see, about 200,000 shares of volume for the last few candles. This would be a +1 here. It was up over 40%. If I remember correctly, it was close to 45 to 50%. This would be a +1. It was under $10. Like I said, I bought it at $1.45. It was the number 3 stock in the market when we traded it this morning, and it is not at any all-time highs. This will be a 0. If we add all of these together, this gives us a score of 11. And according to our True Telos trading grading scale, a score of 11 is an A+ phenomenal stock. We use a strategy called dip to resumption. We waited until price dipped a little bit off of the highs. It got to a high of 152. We bought at 145. So dip to resumption, we are down today per share minus 12 cents per share. So not a big per share drop, but big enough for a big loss of the year, because we were able to buy 530 shares of this stock. We were in this for no longer than 2 minutes. So this matched my strategy to a T. The stock that we traded. This is and when I wish I could show you, but what I saw on the time and sales. And this is a telltale sign for me to get out. And I'm going to learn this frequently. When I bought it at 145, it went up to like 146, 147, 148 to 150. But that price kept on refilling at 148. It kept on refilling at 148. Kept on refilling at 148. That's a sign that sellers are starting to take over and that I need to exit that position as soon as possible. I held until it hit that support point, until it went a little bit under that support point, and then that's when I sold the position for the loss. 12 cents per share isn't a big loss, considering the loss is $63.60. Let me put this in, minus 63.60. Not a very big loss, considering the thing went all the way back down. Right now it's sitting at 107 and I bought at 145. That would have been a very, very big loss for me. And that's not something that I want to do on this account. So let's go ahead and get into the chart to see how we traded this stock today. This is the stock we traded this morning, XAIR. As you can see, it made a pretty decent move here on the spike of the news from 93 cents to $1.42. So what I was looking for was for it to hit this next resistance level, according to my analysis on the daily, of $1.62. Like I said, I'm not looking for a big profit. I'm looking for a small piece of the pie. This was the next resistance point that I saw on the daily. I had bought right here on this candle at 145. It hit 152 and it dipped down for a little bit. I was looking for it to retrace, and go back up to hit that resistance point, but I kept seeing on the time and sales, price kept on hitting 148. passing it going to 150 and then refilling at 148, hitting 50, refilling at 148, and that's a sign that sellers are taking over and start paying a little bit more heed to that. We had a retracement here, and this was the resistance level that I was looking on, that I was looking for, or I'm sorry, not the resistance level. This was the uh, daily 200. This was the daily 200 right here. So that's what I marked at 136. As soon as that thing was a hit 136 and started to retrace under, I sold the position because that just told me that that the bears are winning on this stock today. Nothing's happening. It was refilling. We retraced and we got under the 200. I don't want to keep on holding that. And as you see, it made a full retracement down here. If I would have held any longer, this would have been a huge loss, something that I don't want to do on the account. The point on the account is to minimize risk and maximize profit. And this was a good trade where we minimized risk. Even though it was an A+ quality stock, it did not pan out for us. But we're going to take this red day and keep it moving. It's only Tuesday. We have a few more days left in the week. We're going to be looking for stocks that match our True Telos trading rating scale, and then we're going to trade them and try to capitalize on the moves that we see. If you like this content, please don't be afraid to like and subscribe. If you have any questions for me, please don't be afraid to ask. As always, I'm an open book. Losses are part of trading, and how you deal with them determines what type of trader you are. I will see you all tomorrow. Have a great rest of your day.